If Washington wanted to help out small investors, they should repeal Sarbanes-Oxley instead of allowing private equity into 401k plans. Hi, Jim Gore from THOR Wealth Management. Well, they're going to allow private equity into 401k plans, but instead, Washington should repeal Sarbanes-Oxley. Let's look at what the damage that this bill has done over the years. Now, Sarbanes-Oxley came into existence in 2002 after some of the problems that occurred with the tech boom and some major companies going under like Enron. So they put a lot more restrictions on companies going public. Well, look at what has happened. Look at the amount of companies that are now available on the market. We've seen more than a 25% drop in available companies that are publicly traded. A lot of them have gone the private route. Well, let's look at some of the major companies that became public before Sarbanes-Oxley that individual investors were able to participate in. First, back in 1999, you had Goldman Sachs come out. And Goldman Sachs, you can see, if you invested it when it became public, your $10,000 would be worth $220,000 today, much better than the S&P 500. So that helped small investors as that company became public. On Semiconductor, went public, probably the worst time back in 2000 at the peak of technology. And you can see that in the chart. The stock immediately went down. Your $10,000 is worth $39,000. You still made money, but you didn't make money as much as the S&P 500. And then one more year, 2001, Accenture became public. And Accenture, your $10,000 is worth $139,000. And that is still better than the S&P 500, including the destruction over the last year with AI really hurting Accenture. You still outperform the S&P 500. So smaller investors that got into these investments because they went public was very beneficial. Now, when they went public, let's look at the market cap of these companies. And you can see here that the market cap of these companies was significantly less than the 10th largest company in the S&P 500 at that time, which was Pfizer. Now, Pfizer was, $190 billion. Goldman Sachs was $30 billion when it became public, market cap. On Semiconductor was $3.5 billion, and Accenture, $5 billion. This, in comparison to SpaceX that became public, is either the 7th or largest company. It would be in the S&P 500 if it was in that index. It would be the 7th or 8th largest company, depending on the market that day, and it's fighting for Meta. So it's going public at a much higher valuation. Now, keep in mind, when SpaceX first became a company and they were raising money, which was in December of 2002, after Sarbanes-Oxley, SpaceX had a market cap of $27 million when they did that private equity deal. So you just think about it. Now it's 1.6 trillion or so. It was $27 million back then in 2002. What if SpaceX became public back then? That would have been more beneficial for individual investors. Now, this is the concern that I have, was that you look at these companies that are going public at a much higher valuation, and they're going to private market first because of all the, how difficult it is to go public because of Sarbanes-Oxley. Then they come out at high valuations. And the cost for going into private equity is quite substantial. You look at that versus the index funds. You look at SPY, which is the S&P 500. Your expense ratio is 0.09%. If you look at U.S. small company, IWM, the Russell 2000, it's 0.19% annual fee for that. Well, private equity is significantly more than that. It is 2 and 20, which means it's 2% plus 20% of the game. So if you had a company that made 15% annual growth in the portfolio, you as an investor would be paying 5% annual fees for that. 1/3 of your return is given away to these investment managers, and your net return instead of 15% is only 10%. So looking at the numbers, it would be much better for individual investors instead of going to private equity, which has a lot of leverage, a lot of risk in it. Sarbanes Oxley should be repealed, and we should allow individual investors to get into smaller companies and give them a lot less regulation so that they can become public. If you have any questions or concerns or need help with your investments, as always, reach out to us at thorwealthmanagement.com or give us a call. Take care, and look forward to talking to you in a couple weeks.
Subscribe to the THOR channel today.